Now,
Yes, we can start. Yeah.
okay, good evening everyone. I welcome you all to the roundtable discussion on IBBI discussion papers dated 14 November on standing valuation process under IBC and 17 November 2025 on empowering director partner in IPE by proposing minimum shareholding capital contribution and strengthening safeguards and transparency in CIRP. Today we have with us Suhasini ma'am as moderator. Let me briefly introduce her. She has done AMCOM and law. She is advocate, company
Ma-
secretary in IT.
So we can start, ma'am.
Yes, ma'am, we can start.
Okay, thank you. So we'll start the roundtable discussion on the latest IBBI discussion papers, which are being issued by IBBI. So in this series, last time we had in the previous webinar, we had discussion on the PMLA format and the undertaking which the IPs have to give. So, post that, what are the other IBBI discussion papers which have been issued by IBBI? We will be discussing only three papers considering the time constraint. So, good evening, everyone. A warm welcome to you all. So, this is only the communication should be the two-way around. So we will be discussing the summary and the highlights of these three discussion papers proposed. And we will take the views from the members, and through ICSI IIP, we will submit the recommendations and whatever the suggestions and views members have. So today we will be taking up three papers. One is the IBBI discussion paper issued on 14th November. This is strengthening for the valuation process under IBC, where IBBI is trying to recalibrate the valuation architecture. And the other discussion papers were issued on 17th November. One is empowering the director or partner in an IPE, and the other one is strengthening safeguards and transparency in the CIRP process. Hope my screen is visible, ma'am.
Yes, we are able to see you.
Yes, ma'am.
Okay. So if we see first paper, that is for recalibration of the valuation architecture under the IBC processes, the first discussion paper is on valuation, whatever the processes and concerns. So here the IBBI has issued this discussion paper to examine and address the concerns and inconsistencies, and whatever there was lack of uniformity and some related issues in conduct of valuation. So these amendments will bring in amendment in relevant regulations with a view to strengthen the valuation framework through standardization of formats, then harmonizing valuation standards across all stages, insolvency and liquidation process. So IBBI, the main purpose objectives of IBC is maximizing the value to the of the corporate data which are admitted into CRP or liquidation processes. So during this process, the best possible market-based resolution in a transparent and a credible way the value has to be determined, which should form part as a base for the committee of creditors to take a informed decision. So for this purpose, the object of the IBC, there were a few issues which IBBI has noticed, and they are bringing in five proposals which we are going to discuss. And I'll present the summary and the highlights, and members can discuss and express their views. And we will also go through the paper on 19th November. IBBI has further issued what kind of format and the standard formats and the few guidelines on the valuation. So as we were discussing, some of the key issues which they identified are lack of standardization in the valuation reports and inconsistency in the valuation standards with the different requirements for CRP and liquidation. Then again, fair value definition, which was ignoring a holistic enterprise value. Then higher CRP cost in case of a small companies where there is a mandatory requirement of two valuers. Then one more is the absence of integrated valuation. That means the valuers were not capturing the business synergies of the entire enterprise as a whole, the enterprise value. So if we see, we'll go through the whatever 5 proposals which IBBI has proposed in the discussion paper. One is they want to have a standardization of the formats for valuation reports and the documentation requirements. So I'll just take you through all the 5 proposals. Then I'll open the paper discussion paper wherein IBBI has given the formats and the documentation requirements. So the valuation reports now, whatever the RVs are submitting, they are not in a standardized format. The reports are prepared in diverse formats, and also it is lacking adequate detail on methodologies, assumptions, and data sources. So each valuer are giving different kind of methodologies, assumptions. However, as we all know, recently last year IBBI has brought in an amendment that the IP has to discuss the methodology of valuation at the committee of creditors. But however, going forward, they want to have a standardized format and on how the methodologies the RVs have adopted. And also, in addition to these divergent report formats, there is also no uniform framework governing the supporting documentation.
किया था वो अंकिता से बात हो नहीं पाई, वो शायद आज कहीं उसके गांव वाव गई हुई है, तो कल काम हो जाएगा आपका।
So there is no current uniform framework governing the supporting documents which the RVs are supposed to maintain if for conducting the valuation process. So IBBI is now issued what are the documentations which the RPs are supposed to maintain for conduct of the valuation. So with the proposal 1, now IBBI is bringing amendment to the CRP regulations, then liquidation process regulations and pre-pack insolvency and the fast track and voluntary liquidation process. And for the bankruptcy also. So the registered valuer has to prepare a valuation report and maintain the documentation as per prescribed by the board through a circular. So that discussion paper is already there. This is the first proposal which they want to have a standard format for valuation report and documentation. The second proposal is for the harmonization of CRP and liquidation regulations to follow uniform standard for valuations conducted under the code. So here there was a dual approach where RVs were required to follow internationally accepted valuation standards during CIRP process, but however they have to rely on the company's registered valuers and valuation rules. So there were dual approach which RVs were following. So this has led for the valuers to adopt a different methodologies. So the stakeholders were unable to compare both the reports and have the similar assessments between the two valuation reports. So this has created some issues for the committee of creditors or the stakeholders for decision making. Hence, now it is proposed to have a single harmonized valuation standards which has to be adopted for all the valuations conducted under the code. Either it is CIRP, liquidation, bankruptcy, or pre-pack or fast track. So now board is empowered to issue the regulation valuation standards for the purpose of code across all the processes. So here the words internationally accepted valuation standards will be replaced in wherever applicable, like in CRP regulations, bankruptcy process, PPIRP or fast track. Here the words valuation standards as specified by board will be replaced in the sub-regulation with the internationally accepted valuation standards. So the standards will be specified by the board. And we have the proposal 3, which is improving the definition of fair value to bring holistic value of the CD. So if we see the fair value which was prescribed in the CRP regulation, the definition mainly focused on the realizable value of the CD's assets, which was available to be exchanged individually in an arm's length transaction as on CRP commencement or as on liquidation commencement date. So this definition had a significant limitation. So now IBBI is proposing a amendment to the fair value definition. So now the proposal is the fair value means the estimated realizable value of corporate debtor or the assets of the corporate debtor, as the case may be, if they were to be exchanged on the insolvency commencement date between a willing buyer and a willing seller in an arm's length transaction. Again, this is being added after proper marketing and where the parties had acted knowledgeably, prudently, and without compulsion. So here they have given explanation also. The estimated realizable value of the corporate debtor shall be computed by taking into account the not only the total estimated realizable value of the corporate debtor, including, but again not limited to tangible and intangible assets. Now they are trying to take along with their underlying synergies. So if the corporate debtor has any underlying synergies, that also need to be considered when they were assessing the fair value. So in one of our case, in my case, it was a large corporate debtor which was operating in the citizenship services, as well as they were into providing governance project supports to some of the big government authorities, wherein the valuation of the receivables, the valuation of underlying synergies of the corporate debtor, it took more than 3-4 months for the valuers to assess and bring in. When the COC has discussed the methodology, then the COC has brought in the credentials of the corporate debtor. Even though the company's valuation was too low, the underlying synergies of the company was considered and the valuations were revised. So now with this amendment, now the analogy for the fair value definition, the valuers are going to value not only whatever is the realizable value of the corporate debtor, it includes completely tangible, intangible, and the underlying synergies of the corporate debtor. So we have proposal number 4, that is appointment of single registered valuer for small sized company corporate debtors. As we would have seen in practice market, the small companies are also need to comply with regulation 27, which mandates the RP shall appoint 2 registered valuers. So when the cost due to considering the cost constraints, this is a good welcome proposal, wherein the company, small sized companies, now only the single valuer, one set of registered valuers are proposed. So here the amendment is brought in for the in the CRP liquidation and PPIRP bankruptcy trustee process, where the valuers are to be appointed. The RP within 7 days of his appointment, but not later than 47 days. From ICD, he has to appoint one set of registered valuers in case of CD, where annual turnover of the corporate debtor is less than or equal to 500 crores as per latest audited financials. And in respect of, then option or, in respect of corporate debtor classified as MSME, provided that the committee may decide with reasons to be recorded in writing to appoint 2 set of registered valuers. So in case where annual turnover of corporate debtor is less than 500 crores as per whatever latest audited financial statements, one set of registered valuers have to be appointed. But however, in respect of a CD classified as MSME, one set of registered valuers have to be appointed. But however, if COC feels that they have to appoint 2 registered valuers, then they have to decide with recording the reasons to appoint a 2 set of registered valuers for each asset category. So now we'll come to the last proposal in the valuation recalibration discussion paper which has come. One is the last one is the appointment of a coordinator valuer to estimate the fair value of the corporate debtor. So now the discussion paper proposes for two set of registered valuers who are being appointed under Regulation 27. Each set should comprise again one RV for each asset class within that each set. Like say suppose land and buildings, plant and machinery, SFA. There are two set of valuers. In that again one RV has to be appointed as a coordinator valuer. Again this is by RP in consultation with COC. The coordinator valuer has to be appointed by RP in consultation with COC. The coordinator valuer would be responsible again for integrating the individual asset valuations into a single comprehensive aggregate fair value of the CD. So here again the fair value will be assessed by the coordinator valuer who will be estimating the realizable value of the entity as a whole. So we were discussing whatever the five proposals in the discussion paper on valuation. One was standardization of format of valuation reports, and the other one was harmonizing the valuation standards. That is now IBBI will specify the valuation standards. Then the definition of fair value is proposed. Holistic definition is being proposed, and also the appointment of single valuer for small companies, and coordinator valuer will determine the aggregate fair value in the company. Here the object is to ensure reliability and also capture the synergies and prevent inconsistencies. So this is a brief discussion on the valuation. I'll just take you through the IBBI paper which was issued on 19th November, wherein the specified formats. Let me just close this. Hope my paper is visible. IBBI, I'm showing the paper of IBBI. If someone can confirm.
Yes, ma'am, it is.
Okay, thank you. So this is the paper post 14th November. IBBI has issued the discussion paper on the proposed guidelines for conducting the valuation. So I would like to just touch upon the guidelines which IBBI has issued. There are two parts in these guidelines. One is which includes the guidelines like the general requirements, documentation to be maintained by the registered valuers, and the minimum content of the valuation report, and what are the key parameters to be considered while valuing the receivables. Then part 2 specifies the asset specific format of the valuation report. Like part 2 has the format of how the land and buildings valuation report should consist, and also the land and buildings, plant and machinery, and the SFA. So if we go further, what is the minimum contents of the valuation report? Here they have given this is the minimum content which every valuation report should carry on. That is what is the purpose and scope of the work, and name of the registered valuer and his registration number, details of any other experts who are involved in the valuation, disclosure of value or interest or conflict if any, identify the client who is appointing authority and other intended users, and what is the intended use, details of assets, liabilities, background, valuation currency, valuation report, identification number. See, now they have bought in this VRIN number. that is valuation report identification number has to be given to each report. Then what is the source of information and basis and premise of valuation adopted, valuation standards, valuation approaches, methodologies, relevant discounts and premiums, source and selection of significant data and inputs used, and description of inspections and investigations undertaken, and what is the sustainability and functional factors they have considered which has impacted valuation, and significant special assumptions or limiting conditions, findings, or value and rational, then caveats, disclaimers. This again should be use of caveats and limitation and disclosure should be as per the guidelines of 2020. So while what are the key parameters to be considered while valuing receivables is, this was one of the very critical issues where the valuers were finding little difficult to assess the valuation of the trade receivables. So now IBBI has issued a key parameters to be considered while valuing the receivables. So what is the nature of receivable, trade receivable, loans, advances? What are the taxation related receivables, including any carry forward losses? And what are the applicable regulatory framework or the prudential norms? And also how the asset is classified and provisioning norms, credit risk profile and related party status, what is the financial health solvency status of the defaulter, and any related party status, and the regarding the aging of receivables also they have to be categorized by period wise. So more or less some of the valuers were following this. In our case, I think I have seen the receivables when valued, they have considered all this, and legal enforceability and documentation of status of secured, disputed, undisputed, and what are the KYC of debtors, and whether contract is valid, what is the kind of acknowledgement, invoices, and what is a past recovery and servicing record, historical recovery experience from similar type of receivables from the industry norms. So all this to be part of the key parameters for valuing the receivables. Then we have part 2 where asset specific format is prescribed. For land and buildings, a separate format is prescribed, wherein and one more important is this VRIN number which you are going to generate, that has to be used all the pages on the left side of each page of the report. So you can keep it as a footer, the VRIN number in all your reports. And basically, if we see the contents, who is appointing the agency, what details of the corporate data. So we here the valuer has to include the brief profile, SIN number, date of incorporation, then class of asset, brief description of the asset, scope of work, valuation date, inspection date. More or less, these were covered earlier also. And the source of information. So the source of information also need to be very clearly indicated. They have given this standards which we need to, the registered valuers have to mention. So one is regarding the land and buildings, what are the title documents, site inspection, approvals, list of building civil structures, approved building layout plans, market data from government records and real estate databases, discussion with local brokers. So if we see, they are bringing some more practical aspects of the valuation. So even discussion with local brokers also need to be included now. Expert reports, if any. For land and building, sometimes we take the surveyor reports, and whoever experts are involved, that report also need to be forming part of the valuation report. And regarding the premise of valuation, whether the asset is valued on a standalone basis or a slump sale basis, or valuation of a set of assets are collectively valued, or assets in parcel, or whether valuation is done CD as a going concern. And Also, value of in case CD has a different business verticals, whether each vertical is valued as a going concern. So this is a basic format which is prescribed by the IBBI. Any additional information or additional items may be included for specific asset classes which are required. If RV feels or IP or COC during discussions, if they feel like some more additional information has to be added or additional items to be added, it can be included. Similarly, in this paper, they have provided a format for plant and machinery also. Here, they are providing the details of assets and liabilities being valued, the location, address, plant and machinery, where it is situated, revenue survey, geographical coordinates, whether owned or lease, taken on lease or assignee assets, and year of manufacture, year of purchase, current use of the asset, date of what is the last date put to use, what is the quantity, unit of measurements. So all this relevant information has to be provided. And again, what is the source of information based on which he has valued, like cash flow, balance sheet, or plant and machinery assets register, fixed assets register, then whatever the schedules maintained or purchase documents, site inspection, etc. Then one more point is whatever the discussions with the manufacturers or the agents also, that also need to be included in the valuation report of plant and machinery. And we'll come to the other asset class, that is securities and financial assets. Again, the standard format prescribed is the same at the table, whatever they have given. But however, the subheads given that indicate what is the purpose and scope of the valuation report and when they were appointed and the details of assets, liabilities which are being valued, then identifying the client who is appointing the authority. Then it comes to the valuing SFA. They have to clearly indicate what type of assets or instruments they are valuing, then the company or entity details and the number of units or face value or whatever the preference covenants which they are valuing, then ownership details, who are the legal holders, beneficial interest, and what is whether the asset is under lien or pledge if applicable. And in case of SFA, what is the historical performance and marketability of the asset? They have to consider the market capitalization, volatility, then liquidity, and whatever the loans and advances extended by CD, KYC of the debtors, then business characteristics of the debtors, past recovery trends in the similar industry or with the debtors. And when it comes to the intangible assets, the customer relationships, intellectual properties, domain names, inventories, and even the nature, age of the receivables, recovery trends, all these things have to be captured. And when it comes to the source of information for SFA, they have to clearly give how, based on what they have valued the asset, like financials of the CD, including any base from the explanatory statements, then prospective financial information like projections, and whatever the summary of cash and bank balances, shareholding patterns, suppose company holds any shares in other companies, and from the income tax returns or TDS statements, GST returns, credit ledgers, and for assessing the business value and the synergy value of the company, the industry reports from where they have collected the reports, what is the source, and forecasts, projections. This has to be discussed with the COC when they are discussing the methodology with the COC. So the projections, forecast has to be, valuer has to discuss with the RP, the management. If suppose valuer is having any doubts about the projections or the future forecasts when valuing, he can have discussion with the erstwhile management. That also need to be part of his valuation report. So again, IBB has given this one more point, that is any other relevant information which the valuer or the IP feels they can add. So this is just a brief update on the discussion paper on the valuation. So now the floor is open for the views and suggestions from the members so that we can take it up with ICSI, IIP and submit our comments to IBBI. So we have few valuers like Mallikarjun sir or Akhil sir.
Ma'am, I just don't find any reason for this discussion paper because already we have a concept of registered valuer by the IBBI and they have to qualify the exams and follow the guidelines, and there is some training part also. Thereafter, they are registered. So all these guidelines and concepts should have been known, format, what are the information required in the valuation and other things, what are the documents to be obtained. So I don't know what has been the thought process about this discussion paper when we have already have a concept of registered valuers.
Sir, as we were discussing the object of the discussion paper, which is already given in the IBBA paper, they want to have a uniform valuation report across all the assignments because the methodologies adopted by valuers had different methodologies which were again causing issues for the committee of creditors in their decision making. Also for small companies, if you see the proposal gives only appointment of one valuer to reduce the cost. This is again some are practically relevant and also about the applicable guidelines for valuation, international standards and registered valuers rules. So now IBBI is authorized to issue the valuation guidelines. So to bring the consistency in the valuation process. So the paper is open now. We have to submit our suggestions or views so that based on our views, IBBI will take a call.
Yeah, so I wanted to give some suggestions. Maybe you, as you mentioned, these 5 points, five sections. I wanted to give each point wise some
Please.
suggestions for this side. Okay, see the first one, the standardization of the valuation report.
Yes, sir.
Okay, the thing is we need to give that formats for each sector wise because the valuation report it will vary for the maybe the value is not going to change, but the report formats it might be required to change each sector wise. You know there are some by attaching the annexes like the real estate, pharma, EPC projects, and technology company base. So like this one, maybe each sector wise, if they are making some standard format, it will help for the valuers.
Okay, sir.
And another thing is the materiality threshold. So they mentioned the minimum mandatory documents. What are the documents are required? Because these are the distressed companies, most of the IBC companies. So they need to specify, okay, fine, this is the nature of the business. Maybe these are the minimum documents it is required for this one. Okay. And guidance notes on templates. No, along with the format, IBBI may issue guidance notes with examples to ensure uniform interpretation by valuers. Otherwise, each valuer is going to interpret it in different way, and whatever the format is given, the values are not going to match unless if they will standardize that guidance note.
They're going to issue the valuer guidelines, sir, uniform.
Yeah, unless that's why each sector wise, maybe they need to give specifically what are these guidance notes so that maybe it will be interpretation, it will be uniform for all the valuers. Okay. And another thing, maybe this submission of the format, digital submissions. Like, the introducing common digital template in either in Excel or JSON based or whatever the format they are going to make it for structured fields. so that comparability and auditability, it will be easier for the members. And changing the format, if the IBBI is changing the format frequently, so it will confuse the valuers also. So maybe they need to standardize and they need to put some timelines, maybe until for another 3 months or 6 months, they are going to use the same formats. So that they are not going to change. If they are changing frequently, so adapting the new formats, it will be difficult for the valuers again.
Okay.
And when it will comes to the harmonization of valuation standards, okay, maybe see sometimes the valuers, they are doing the different kind of valuations for the companies, either for the as per the IBBI or as per the Income Tax Act or as per the MCA. So maybe adopting the international aligned standard, it will help for the valuers, so that maybe when they are doing these valuations of different types, maybe it will help for the valuers.
Okay, sir.
And training for the valuers. See, once they will implement the templates and the interpretation from the each valuers are different. So at least maybe they need to give a 3 months time and they need to give some training aspects to the valuers, so that everybody, they will adapt the same methodologies and the same formats.
Okay.
And at the same time, the conducting the regular workshops and FAQs from the IBBI side, also by giving the clarification to the valuers. So it will help for the standardization of the reports.
Yeah.
And with regard to the fair value as they proposed in proposal 3, so they need to provide the detailed framework for intangible valuations, like the IP, brand valuations, goodwills, or customer relationships, or technical know-how, or licenses. Like these are the areas they need to give specific inputs, standard inputs, and approaches for valuing these kind of intangible assets. Like with examples, with the data available, whatever the data is available with the assumptions. So if they are providing some examples, it will guide the valuers also to apply the same method and approaches for the intangible assets.
So as you rightly said, maybe the data constraint is one of the biggest hurdle, non-cooperation.
Yes, right. Plus, some of the companies, even the CDs are not supporting the information. It is not available when it will comes to the whatever the methodology, whatever the templates they are providing. Sometimes it's very difficult to fill the information as required by the IBBI.
Okay, we will add this point, sir.
Yeah, and another one, when it will comes to the single register valuer, small companies, whatever the proposal which they are given. So
Yes.
maybe they need to give the this criteria of the assets instead of the turnover, because sometimes the huge turnover is there, assets are less. So turnover does not sufficiently reflect the asset complexity. Okay, so maybe single value are allowed where the total assets is less than 50 crores, something like that one. Maybe by putting the asset value criteria is the more ideal instead of the sales.
Yes, sir.
Because when it will comes to the trading kind of organizations, so there if they are appointing one value, or if they are putting the turnover, it won't help for the entrepreneurs. So maybe they need to put, okay, if the asset value is less than 50 crores, and then they can go for the one valuer. And mandatory disclosure by valuer also, we need to specify single valuer should certify that the asset complexity is simple enough to be handled without a second valuer. Because here the only one valuer opinion we are going to consider. So we need to see the complexity of the asset also, not only the turnover and the sales. And also giving the option to the COC when to opt for two valuers. So what are the situations where they can appoint two valuers irrespective of the turnover or the assets?
That
Like sometimes,
that is there, sir.
yeah.
That is
situation. Sometimes in the multiple plants are there different locations, or now it is coming the cross-border assets. So there also maybe going with the two valuers, it will be gives a more accurate information. And the complexity of the machinery, sometimes the assets are so complicated. So it is better we will go with the two valuers to take two opinions.
so for small companies that is already there, sir. Maybe this
No, for the small companies, when because they can go for one valuer to reduce the cost. So that is the main purpose of bringing the proposal for.
okay.
In that proposal also, sometimes maybe we need to give the choice to the COC to go for the two valuers where the locality of the plants are in different locations.
That is there, sir. That is there. They have prescribed high, turnover, or if COC feels they can have two valuers, that has to be decided by COC. That is there. That option is there.
Okay, okay, fine. So maybe when it will comes to the last point, the coordinator, and there they need to specify what is the skill set required for the coordinator. And if is there any aggregate asset value, something, if it is there this much value, then maybe they can appoint the aggregator. And what are the synergies are required for the understanding the assets for the coordinator, like this kind of thing. And what are the scope and responsibility of the coordinator, like the responsibility and the limits of what authority and treatment of disagreements. Sometimes with the valuers, if the two valuers are there, there is no disagreements, and there is a different of opinions from the each valuer. And the minimum interaction expectations between the valuers. So these are the qualities or something, some kind of special skill sets are needs to be specified for the coordinator. And maybe, as I mentioned, digital template, a common template sheet will ensure uniformity in synergy calculations and consolidation for asset values. And here, sometimes here significantly difference, like instead of 25% absolute difference. So consider that one the relative standard deviations and value ranges in rupees or asset classes, something like these are the factors. So these are the suggestions from my side.
Okay.
Okay.
Thank you, sir.
And another thing is, madam, just one more line I wanted to add. So maybe if they will start maintaining the central valuation repository, so where we can keep all the valuation reports on each valuer wise, at the same time, along with the valuation reports, we can keep working papers and standard forms, whatever we are taking as a source of information for drafting that valuation reports, so that the valuers this one, it can be centralized and it will be under the control of the IBBI.
Okay.
And before starting the work, maybe they need to fix some mandatory meetings with the RVs and RPs before valuation work starts, so that both the valuers, it will comes on the same understanding, and maybe they can take the difficulties and whatever the data. Sometimes the data is available, sometimes it is not available because of the support from the management. They need to standard checklist for all CIRP entities. The valuation timelines with clear guidance into the sector specific. Yeah, these are the suggestions from our side, Suhasini.
Yes, sir. Thank you, sir. Many of them are practically based on your experience you have suggested. We have made a note, sir. Thank you
Fine.
for your time.
Thank you, ma'am. Thank you.
So, Ravi Prakash, sir, has raised his hand. Sir, if you can share your views.
So, good evening, all.
Good evening.
I have a couple of what I call confusions that I have. Okay. So I just want to put it across, and maybe somebody you can clarify that, or somebody else can answer. Okay. The current registration of valuers is under three asset classes:
Yes.
land and building, plant and machinery, SFA. Okay. Now the proposal is to have within the fair value valuation of such possible assets which don't fall in any of this or which are not reflected in the balance sheet or the asset memorandum of the CD. Okay. Brand value. Many companies don't actually provide for it in that. And for a lot of genuine and valid reasons, because there is an issue of taxation and other things. Nobody really, values customer relationship. It's one of the most difficult things to do, and the best valuers in the world struggle to do this when they actually do it for buyouts. When somebody is wanting to buy out, this is naturally taken into account. IPR to some extent, yes, but again, mostly it is confidential and nobody discloses that value for very valid reasons. They don't want to. So how would this be implemented? Which category of valuer would be eligible to do this, or will there be a fourth category which is required to be done? Who will be trained or who will need to have the qualifications required to do this valuation? The valuation of those intangibles, etc., which are not being captured today, which are not part of the balance sheet. Okay. So that is the first question as to what. Second is, obviously, this is part of fair value and not of liquidation value. So the question that arises is, in all these 8 years of IBC that we have seen, most of us, especially IPs can take, how many instances are there where fair value has ever entered the discussion, let alone using it? The answer is a big zero. Okay. Even the internal formats of all the banks, which guide them in when they decide on the approval of a resolution plan, don't talk of fair value at all. Because it's a very dicey affair. It's maybe used as a back of the mind guideline, but doesn't really help. So something which might have almost zero practical value, why are we even thinking of doing all this? Okay. So my big question is, why have this thing at all? Because it is not really changing anything except introducing a new concept of capturing value, which is otherwise not there in the balance sheet or any financial statement of the corporate debtor. And for what purpose? A company in insolvency has usually lost most of this anyway. Usually. Okay. Rare exceptions would be there. And if there is something intrinsic value is there in a corporate debtor, let's say it's usually a going concern, whatever. The resolution applicants are intelligent and wise enough to factor that in and bid for it. And once you have a level playing field for getting a resolution or a liquidation, this will get factored. Last point, carry forward loss. There is something called Section 72 and Section 79 of the Income Tax Act, which restricts the usage of carry forward loss in certain circumstances. And most of the cases in IBC, that will be applicable, especially Section 79. When the shareholding changes hands and you don't have the carry forward to 51. So which provision of IBC is overriding Section 79? And if it doesn't, then what is the point of talking of valuation of CFL? This is an inherent contradiction which IBBI has been talking about it. But I think this is in conflict with law. Unless there is an express provision in IBC which allows carry forward losses superseding Section 79 of Income Tax Act, there is no point in talking about it. So some of these provisions are maybe nice on an academic viewpoint, but I think they have practical value may be very low or enforceability may be impossible. It ultimately, no NCLT ever gives you this relief. They have understood it. It's beyond their jurisdiction. They don't give it. They say approach the income tax department. And IT department will say, sorry, 51% breached, you don't get it. So what is the point of doing something which ultimately, okay, putting the number, it's already there. Okay, that's fine. But, valuing the carry forward loss, what is the meaning of that? I don't understand. There is already, it is reflected in the balance sheet in the form of deferred tax asset or deferred tax liability. Okay. What more valuation will that be done? Okay, every year that goes by, you lose 1 year of that. But that's something which everybody knows. I mean, any decent commercial person who is going to acquire a business would have far more understanding of these issues than any of us can ever hope to. Hmm. Okay. So those are my points. Thank you.
Okay, sir, then what are your suggestions? Like possibly fair value, you say that it is practically
My
not
suggestion
significant.
would be there's no point talking about it. It's got no relevance at this point of time. Just forget about it.
So you mean to say once the guidelines are notified, then we can have a discussion?
No, tell me which valuer among all the registered valuers, how many would be have the ability
Hmm.
to value these items? The best valuers in the world struggle to do that. Okay. And where is it going to be used? After you do all the valuation, where is it going to be used? Okay, it will obviously increase the number. Now we struggle that even liquidation value, when it comes to liquidation, we have to keep going down, down, down to sell assets most of the time. Most of the time. Now fair value is much higher. So what is the point in having it? It might just delay decision making by those creditors who would be scared to do something just because they might be questioned later. Why did you approve a plan which is so much lower than the fair value? And that questioning will happen 3 years later, 5 years later. Could be after the person has retired who has approved it. So it doesn't add value. We should not be doing anything which does not improve the process or add value to it. In my opinion, this entire discussion of formats and all is fine. Those are great suggestions. I mean, there's no question about that. My problem is with this fair value and this. I think that should be dropped.
Okay. And also you have one more suggestion about the category of valuer who will be doing the
Yeah,
valuation.
if it has to be done, who will do it? Which of these three? Can you pick anyone? Now, a plant and machinery valuer might have no clue how to do this.
Hmm.
Okay. So the
Hmm.
residuary category is usually SFA.
FA,
Because
yes.
SFA. And then how many SFAs really understand customer relationships? How do you value that? What are the parameters? It will take 3 years of training just to get some, reasonable level of competence.
So I
Oh,
agree
we are
because
not at that stage yet. 5, 7 years later, this can be revisited. Till that time, we don't need it.
see, even if it is sector specific experience also to the valuers, then again under the guidance of COC and the management and industry
COC will give zero guidance on
activities.
valuation. I know how COC will act on this. Let's be practical. We are discussing here how it will be
Yes.
implemented, not writing a PhD thesis, okay, for academic purpose. So, from a practical standpoint, this is premature. This is not implementable. It should basically be not done now. Keep it for a later date. Let's see. There's no hurry. Something which is never been used for 8 years. Now you want to inflate it by another 10, 20, 30, 40%, God knows what, and it will continue not to be used. What is the point? Unless the regulations are amended to say how it shall be used.
Hmm.
Let it be put there. Okay, let's say they say average of LV and this thing will become the reserve price. So today a liquidation which takes 2 years will start taking 5 years.
Because of the fixing of reserve price.
Yeah, because these valuations don't fetch value. We are doing the entire CRP and liquidation process is a public process. It's not private treaty,
Hmm.
barring few exceptions. The whole world knows, and if you are not getting bidders, it means that you have not put honey out there, you have put vinegar. Vinegar will not attract flies. तो कहते हैं ना हिंदी में कि गुड़ रखेंगे तो मक्खियां आएगी, अगर गुड़ नहीं होगा तो कोई भी नहीं आएगा. And nobody can understand the acquisition value better than a prospective buyer. Their methodology, their experience, and the resources which they will deploy to assess the value of something buying. How can that be matched by the seller? Seller will always want the best, as high as possible, 100%. That is wish list. That doesn't capture it from a buyer's standpoint. And once you have, I mean, just let me give a very simple example. You got something which, let's say, a kilo of gold, 1 lakh rupees. I'm just saying a number, okay, or 1 crore. And you put a reserve price of 1 lakh. Do you mean to say it will sell at 1 lakh? There'll be 10,000 buyers who are wanting to go as close to the market value as possible. So reserve prices and valuation do not affect sale, except in private treaty. There it is very important. If it's a public auction, these things don't have any meaning whatsoever. And they are just a starting point. Okay.
Okay. Sir, any views or suggestions on whatever we have discussed now with Ravi Prakash sir? I think Mr. Rajesh Seth sir has raised his hand.
Yeah. Am I audible, madam?
Yes, sir. Yes, audible.
Madam, I am an insolvency professional and I give my views from the point of view of insolvency professional. First of all, I feel this entire exercise will increase the cost of valuation. It will not reduce the cost of valuation, but it will drastically increase the cost of valuation because valuer will have to go through so many extra things. He will have to stick to this format. He will have to do so many new things. So ultimately, the cost of valuation will be far, far higher. Second thing, if in my case, I have handled assignments where number of assets, for example, number of properties were more than 60 to 70 all over India. Now, and there were practical difficulties in visiting each and every property, that is hotel, resorts, like that. So can you imagine compiling this kind of information, what is given in this format for each property? It will be very time consuming. And third thing, IBBI has prescribed the time limitation for completing the valuation and putting before COC. Even appointing the valuer before within 7 days of RP appointment. Now, how do we choose the proper valuer who will be able to comply with all these things? That is another big doubt in our mind. So these are the some practical things, and most important thing, the whatever details have been asked to comment on the standard report. So those kind of details are not available with RP, and CD is not ready to share those details. Neither erstwhile management. Then what is the use of putting all this? And actually, as Ravi Prakash already said, ultimately it is a valuation, is an estimation, and how it is used, whether by COC or by RP or by resolution applicant, as a guidance. But if it is not going to be used, then what is the use of this all big exercise? That is what I wanted to say. Thank you.
Okay, thank you, sir. And we have Mr. Anil Agarwal, who has raised his hand. Yes, sir.
Hello, ma'am, am I audible?
Yes, sir. Audible, sir. Very
Yeah, ma'am, as opinion given by gentlemen, there is no doubt that once the company go into liquidation or CIRP, there are things which are quite discretionary in nature. It cannot be, means everyone has its own opinion, everyone has its own stake. So it cannot be said that there will be uniform evaluation process or uniformity in the process. But things cannot be left unchecked or unbalanced. Means there should be some guidelines and standards. And thinking about that, I think these standard guidelines uh, are important, but should focus upon the fact that once the valuation has been done, the things has to be taken care at the level of the COC or the committee of creditors, wherein whatever justified way they move the things they feel that valuation should be or the cost should be, accordingly that unanimous decision has to be taken care, although valuer has to do the things as per standards only, and these standards needs to be means they have to be chalk it down, and they have to be means it has to be passed in a very specific manner, because as an insolvency professional we are facing this very issue that the valuations are quite means there is a large difference, means in some of my case I have found that once the valuation done is of rupees 10 lakhs, after 2 years the same property is valued for 1 crore. Now the thing here is ki the difference in valuation and the process are quite erratic, and these needs to be checked somehow with some basis of standards only, I think. That's my point, ma'am.
Yes, sir. The guidelines will be issued for valuation.
Yes, sir.
So majority of practical issues Ravi Prakash sir has raised, but however practically some suggestions proposal wise Mr. Mallikarjun sir has given. So any more views or suggestions on the discussion paper of valuation? Otherwise, we'll just take up the other two papers. So we'll summarize whatever the views and suggestions provided by the members, and we'll submit to ICSI IIP, and they will take it up with IBBI. So the other discussion paper is on the, sorry. Trying to share the PPT, just give me a minute. We have one more discussion paper that is on the shareholding. Hope my PPT is visible, sir.
Yes,
Someone?
yes, it is visible, Suhasini.
Okay, thank you, sir. So we were discussing about the proposal discussion paper on valuation. So we have received the views and suggestions from few members, which we will take up. Then the other paper which was issued on 17th November is on minimum shareholding in IPE. So if we see the current framework which is a legal framework, statutory provisions we have for the IPE is Regulation 12 of IP regulations, which provides for the recognition of IPs under subregulation 1, which is a company or a registered partnership firm or a LLP, which may be recognized as an IP, which fulfills the following conditions, like where majority of the IPs, insolvency professionals are the partners or directors in that IPE, and no cross membership, like none of the partners or directors of such IPE should be a partner or director of another IPE, and the minimum net worth was 1 crores. So this recognition was granted to IPs subject to satisfaction of other conditions specified by IBBA and also payment of fees. So now the discussion paper, in absence of any specific regulatory guidance, IPs have adopted divergent ownership and capital structures, and also there are unknown uniform practices across the ecosystem of IPs. The composition of ownership and control within IPs, in certain cases, there were disproportionate or giving rise to governance and fairness issues, concerns. So now, the current ownership structures in IPE, the IBBI is proposing that whatever the director or partner, whoever is the director or partner, must hold minimum 5% shareholding in the capital contribution in the IPE. If the IPE has more than 20 members, then the minimum shareholding will be reduced proportionately to ensure fairness and balance. So here, the most of the IBBI has noticed that most of the IPs does not have the 5%, more than 5% uh, stake by the partners or directors, and because of which the profession has high professional responsibility. So this proposal is being proposed that every director or partner must hold minimum 5% shareholding contribution. So any views or suggestions? Or otherwise, this proposal is good to go? No views or suggestions?
One question here.
Yes, sir.
Maybe loud. Uh, does this include voluntary liquidation or not?
Uh, Sir, this is voluntary liquidation is different. Here the proposal is insolvency
Oh, sorry.
professional.
My bad. No, this is fine. I mean, no comments on it.
Oh. So if we do not have any comments, we can go to the other discussion paper, which is more or less the regulation of the standards or processes.
In the earlier one, there's only one suggestion. People who are just joining this profession, for them, it will be little, it's more like a barrier to entry because now they need at least 5 lakh rupees contribution.
If there are again 20 members, sir.
So,
If,
or you join a very large firm which has 100 people and then you only put 1 lakh. So, otherwise, I don't know, for newcomers, I'm only saying, I'm sure senior people won't mind putting 5 lakh rupees or 10 lakh rupees for that matter. But that's all. I mean, no argument with the 5%. I think it's a good move because many people are just putting name, having 0.01% kind of partnership. So yes, it's a decent move.
Okay, sir. Thank you. So now I'm sharing one more discussion paper which was issued on 17th November. Hope my screen is visible, sir. Hope my screen is
Yes,
visible.
please.
Yes, yes.
Visible.
Okay, thank you. But it's not visible to me.
You are on page 1.
Okay. Okay, sorry. So this is a discussion paper which is issued on 17th November. This is for strengthening the safeguards and transparency in the CIRP process. Here there are 4 proposals. One is disclosure of
Good evening, sir.
Yeah.
the entire sorry.
Hemant చేస్తున్నాడు కదా.
Oh, this discussion paper has come in because of the practical difficulties or issues faced during the processes, as well as because of the judicial precedents. So these 4, whatever the proposals we will discuss, this is only for strengthening the safeguards and transparency in the CIRP process. So one is disclosure of allottees in the information memorandum and their treatment in the resolution plan. So when we come to this point, this proposal, so under the existing framework, what we all know is whoever submits the claim to the IRP or RP, whatever the claims are submitted by creditors, they are only included in the IM and they are only forming part of the resolution plan. So they will get the distribution in the resolution plan. But however, in many real estate cases, so several allottees whose details are not reflected in the IM and who have not filed the claims within the prescribed period and they were not forming part of the IM and resolution plan. This all created a lot of practical difficulties at the implementation stage. So, in taking the basis from the Honorable NCLAT order in the matter of Puneet Kaur versus KV Developers Private Limited, wherein the home buyers who could not file their claims within the specified timelines, which are they were not reflected, although they were reflected in the corporate data records, but not included in IM, and the they have been not been dealt in the resolution plan. In that claims, they have to be treated, they have to be included in the IM. That means now IBBI is proposing the amendment where it says to ensure fairness, transparency, and parity of treatment among all genuine home buyers. Now the IM shall include all the details of the allottees, including their names, amount dues, units allotted, as per the corporate records. So if suppose the corporate data records are showing and the creditor has not submitted the claim, now the IP has to include them in the IM and it has to be dealt in the resolution plan. So this is a good move. This is a good amendment which is proposed. So any views, or we can discuss all the proposed amendments and then we can take up. Then we have the other proposal, which is again based on the Supreme Court judgment. This proposal has come in, which is a disclosure of receivables and the joint development agreements in the IM on the assets under attachment in the IM. Like there are 3 cases. One is receivables, joint development agreements, and also the assets under attachment. So these also need to be provided form part of the IM. In many cases, these were not reflected and not forming part of the IM and not dealt in the resolution plan, and which has created issues with the SRS. So that lack of disclosure of such rights, particularly when it comes to JDS, they have run contrary to the interest of the stakeholders. Hence, as per the Supreme Court order in judgment in Victory Iron Works versus Jitendra Lohia, the development rights created in favor of corporate debtor constitute the property. So this again within the meaning of section 327, 3 subclause 27 of IBC. So it must be recapitulated under the definition of expression of property under section 3. So every description of interest, whether it is present or future or vested contingent interest out of incidental to the property, since that has used in common parlance which denotes property of any kind. Hence, this has to be disclosed. So the proposed amendment is now the IBBI is proposing in the IM to expressly now mandating to inclusion of certain key information like receivables of the corporate debtor, trade receivables, then joint development agreement and similar any collaborations or development arrangements, including any rights or interests of the corporate debtor, uh, and also assets which are under attachment of enforcement agencies. Some of the IMs have not included that, because of which during the implementation it has created the issues, like particularly like when it comes to the attachment by the enforcement directorate or income tax authorities. All these have to be forming part of the IM. So any statutory authority attachment also need to be included, like sometimes EPFO attachment. So those are all very, very critical. So now it is the amendment is going to come in regulation 36(2) to include all the details. Then we have the proposal number 3, which is where no financial institution is represented in the COC. So as practically the code is getting implemented, we have seen in many cases where the unregulated financial creditors are forming part of the COC and they are holding more than 66% of the voting share. In such cases, the decision making is controlled by such a creditor. So that creditor is not a regulated institutional member. So now to safeguard the integrity in decision making so that interest of all stakeholders are protected, now IBBI is proposing that no financial institution, in case in a COC, if no financial institution is represented and a single unregulated financial creditor is holding more than 66% voting share, then RP is supposed to invite the 5 largest operational creditors admitted in value to attend the COC meeting only as observers. Then that observer shall be entitled to receive notice, agendas, minutes, and also they need to participate in deliberations but with no voting rights. And whatever the COC takes decision, again the reasons have to be recorded in the minutes. This is again in the interest of all stakeholders, where there is no regulated financial institution is part of COC. This amendment is proposed in the regulation, CIRP regulation. Then we have mandatory proposal number 4, which is mandatory recording.
Small doubt.
Yes, sir. Yes, sir.
This one, the 5 operational creators, when they're joining in the COC, do they have the voting rights or just only for?
No, sir. It is very clear that they will be observers. They shall be entitled to receive notice, agenda, minutes, and may participate in deliberations without voting rights.
Okay, so then what is their role when they are taking the voting? When it comes to the voting, unregulated financial creator, if he is holding more than 66%, so
Yes.
he is going to continue whatever the decision he wants to take it. But
Yes.
these operational creators, they cannot stop their decisions, right?
They cannot stop, but only they have to record the reasons. Even the COC whoever is taking decision, they have to record the reasons in the minutes. Detailed reasons have to be recorded in the minutes for the decisions taken by COC. And these members will only attend as observers and their views can be recorded in the minutes, but they do not have any voting power.
Just to bring the transparency. That's
Yes,
it.
sir. Object is one of the objects of IBC, interest of all stakeholders.
Okay, okay, fine. Thank you.
Yes, sir. Welcome. Then proposal number 4 is mandatory recording of reasons by COC for recommending liquidation. So if we see in few cases where the viable resolution plans are received, also COC is recommending for the liquidation. In that cases, Now IBBI is proposing an amendment to Regulation 40D, where it says that a compliant resolution plan of value more than liquidation value was received. The reasons for recommendation for liquidation shall be recorded and submitted in application filed by RP before the AA. So this already majority of the times, as the insolvency professionals, majority of the COC decisions, we are asking them to record the reasons. So this now has come as an amendment wherein sometimes the COC is not recording the reasons for recommending for liquidation. So as a best practices, some of the IPs were recording the reasons for the rationale behind the COC decisions. But however, now this is a mandatory amendment which has come in the wherever there is a resolution plan and which is more than liquidation value, now the COC shall record. It is, they have to record mandatorily the reasons for liquidation. So there are 4 proposals here we have discussed. So now the IBBI paper is IBBI portal comments can be submitted where the discussion papers are there and the link is given wherein the IPs or registered valuers or IPs or any academicians or investors or sometimes even the corporate data, even personal guarantors, they can submit the comments in case they have general comments or specific comments, whatever comments they have. Each paper has some timeline, 7th or 8th or 10th. So as per the timeline given, the comments can be submitted. So to consolidate, hello? Yeah, sorry. So any views or suggestions, or otherwise we take it that in the discussion papers of 17th November on the minimum shareholding as well as the standardization of the processes, CIRP, there are no views or suggestions which we can make note and take it with ICSI IIP. So Anjali ma'am, so I have concluded my presentation and also we have taken views and suggestions from members. I'm just waiting for IPA to conclude the meeting. There are no questions in the chat box. Let me just check. So there is a question, opinion, Rajendra Joshi. If there is only operational creditors, no financial creditor, then no fee, no cost is paid. Then we have to move an application with adjudicating authority for the payment of fees, sir. From the applicant.
गया नंबर अभी व्यस्त है कृपया कुछ समय पश्चात प्रयास करें The number you have dialed is currently busy. Please try later.
Hello.
Hello. Hello. Hello. Hello. Hello. Yes, sir.
If you're waiting for the ICSI person to respond, forget it. She won't. You just close the session, it will get recorded automatically.
Okay, okay. Okay, sir.
I
Yes,
know about
ma'am.
that.
What are you
She
saying?
never attends.
Oh, ma'am, yeah, we have concluded the session.
Yes, yes, yes. Then we can conclude it.
Okay.
Thank you very much, ma'am. Thank you all the participants for
Thank
giving your valuable time and sharing the suggestions with us.
Thank you, Suhasini ji. Thank you, Alka ji. Thank you, everybody.
you, sir.
Thank
Thank
you.
you, everyone.
Thank you, Suhasini madam.
Thank you, sir.
थँक्यू मॅम.
अरे यार आपण लेट जॉईन केलं काय थँक्यू म्हणत बसायचं तिथं थँक्यू मॅडम थँक्यू
Late join also can say thank you. It's okay, sir. Thank you, ma'am.
तूने बंद किया लगता है
Thank you, everybody.